Attackers are only getting more proficient, so how can you proactively adapt your cybersecurity strategy? Core Security by Fortra helps you uncover and prioritize the risks that pose the biggest threat to your organization. Core Impact is a penetration testing tool that safely finds and exploits vulnerabilities using the same techniques as attackers. You can conduct advanced pen tests with ease using certified exploits and automation. Take your engagements further by pairing with our red teaming tools from Cobalt Strike and Outflank. Learn more at www.securityweekly.com/core security. Welcome back to Enterprise Security Weekly. Don't forget to check out our library of on-demand webcasts and technical trainings at securityweekly.com/on-demand. And there's a lot of cool ones in there that we did last year. And now it's time for the Enterprise Security Weekly news. It is that time. You can check out securityweekly.com/ESW305 if you want to follow along as we go through the news. We don't always get through all the links, but I cut out a lot of stuff. Everything that gets posted to the show notes is probably worth checking out. For everything you see there, there's at least 50% more that I've cut out and just not even bothered including it. And then we won't even get through all those. So be sure you check out those notes, see what you're missing. All right, shall we start with this one was a little bit fun to go through because we have a funding section, an acquisitions section, and then a defunding section this week.
Ooh, those are always fun.
I called it defunding for the companies that are having trouble going out of business. It's not typically something you need a section for when you're talking about security vendor market trends.
We could call it the cybersecurity dumpster fire section.
That's too long as a header, though.
It's also too mean. It's also way too mean.
Well, we could use. Is there a dumpster fire emoji? That is pretty mean.
It's super mean because, in all honesty, many of them are not dumpster fires, right? There might be a victim of circumstance with regards to market downturn or, an inability to predict a couple of whale deals falling out. Like, it's not always a true dumpster fire, although in looking at the list that you provided for this week, some of them definitely are dumpster fires.
One of them is at least one of them is a dumpster fire.
Yeah, exactly. I just don't want to be mean, like, universally across the board and do a dumpster fire section. That would just be awful.
Yeah. No, I wouldn't do that. Though I'm sure Gus could come up with some great graphics if we did that as a theme. So yeah, I found
almost like, what we could do, Adrian? We could do crying unicorns, a unicorn tears section.
Mm-hmm. Crying unicorn?
Yeah, a unicorn with tears.
But what if it's a zombie corn? Would we have a crying zombie corn?
We could. It's high potential.
Or is that redundant?
All right, continue.
Are a zombie corn's brains on the outside of his head?
And she said it with such a straight face. That's the best part.
All right. Yeah, so I think we've got a ton of these now. These, like we had just been calling them, I don't know what we were calling them. There is a term that's more of a formal term, and I have to look it up every time for cyber insurance companies that are basically authorized to price a policy. MGAs, is that right?
I don't know.
MGAs and MGUs, we mentioned them. We talked about it a little bit when we had Heidi and some of the folks from Forrester on, but yeah, they're calling them Insurtechs now. They've come up with a portmanteau, a combination of insurance and tech, and yeah, the term is MGA, Managing General Agent, or MGU, Managing General Underwriter. So I don't know if these companies qualify for that. I still don't know enough about cyber insurance to understand if I'm using those correctly. I don't know if these are MGAs and MGUs. But yeah, they're calling them Insurtechs. I guess the idea is you get, even if the insurance policy isn't with the tech company, like you're getting it through the tech company. So maybe it's kind of like a neobank situation where if you have an account with Chime or Current or any of those neobanks out there, Rip Simple, you don't actually have, they're not a bank, they're a tech company. So your actual account is sitting in a bank. It's an actual checking or savings account at the underlying bank. They just kind of wrap this SaaS software layer. Well, and it's more than that, right? Like it's, you're using a neobank because they don't have any fees for anything, which they don't have because they don't have any branches, so they can make all the revenue they need just off of interest and stuff like that.
Yeah, it's really neat to see. I mean, you clearly have a better grasp on how that stuff works than I do. I didn't even know those terms, but it's neat to see how combination of security technology, risk enumeration, risk quantification technologies can be used to, more accurately create insurance that can actually be delivered, right? It's kind of neat to see that coming around. It's kind of like the old trackers in the cars, right? The trackers in the cars were always said, eventually it'll lower your insurance down, and feels like that's very similar by combining the technology and the general underwriting.
Yeah, and the two we're talking about here, stories number 1 and number 3, are Box Insurance, and which I believe is a Canadian startup, Toronto-based Insurtech, and then the other one is a German company called Baobab. Is that how you say that? Baobab? It's like the tree. I'm not sure how to say that.
You got me on that one. Can't help you there.
Yeah. So interesting trend. I'm going to have to start making a list of all these because I'm pretty sure we're over half a dozen and we're closer to a dozen now of these. Actually, I've got the list started.
They're all micro. They're all micro in size, Adrian. And do you have any U.S. based?
Yes, sure. So no, they're not all small. These two just happen to be emerging, just grabbing their seed. At this point, their seed funding rounds, but Corvus is a pretty big one. Coalition is, I think, the biggest one that I would put in this Insurtech category, and then you've got AtBay is another one that we've covered, and Alpha Secure, maybe Ridge Global, and Mitigate Cyber. I had more on my list than I thought I had.
That's a pretty healthy list. The market's clearly forming.
Also, Resilience, I think, is one also. So I'm going to have to go through this list, and I suspect within this list there might be several categories, and maybe these aren't directly comparable. But yeah, it's definitely something to dive into a bit deeper. Maybe we can maybe we can find some VCs, some folks that are actually investing in this space to come on and get interviewed and explain it to us a bit more. All right. See, the story number 2, the only reason I included this, there's a lot of Web3 stuff I just leave out because it's just noise to me personally. But this is one of the first ones I've seen actually tackling what I think is the biggest issue for consumers and cryptocurrency, which is losing your stuff, getting your stuff stolen. One of the features of the blockchain is that once it's gone, it's gone. You can't get it back. So it's unclear to me if this company is doing asset recovery for companies, for law enforcement, for consumers, or like all of the above. But they're doing they're attempting some kind of asset recovery. And we know asset recovery is possible, especially when you get law enforcement involved, because if it's somewhere where the U.S. can still reach, they can, work with the exchange or wherever that cryptocurrency happens to be sitting. If it goes straight into somebody's cold wallet, I don't think there's a ton that you can do. But if it's still sitting at an exchange, maybe there's some opportunity to recover it and reverse that transaction.
Isn't that what they say about crypto in the first place? If it's at an exchange, it's not yours anyhow.
Mm-hmm. Right.
So, I mean, if it's not yours anyhow when it's sitting in an exchange, then how is a company that's recovers crypto from exchanges like, so what? Couldn't the exchange just properly recover it for you? I don't know. Maybe it's definitely showing my ignorance of crypto for sure. Like I definitely am not a pro in that area, but I'm not even sure how you would go about kind of tracking that back. It reminds me of the Wired article about some of the recent drug kingpin that they caught in Wired. Wired wrote up like a 6-piece article on it, and one of the ways that they caught them was tracking through the blockchain for Bitcoin transactions using was it chain analysis technology?
Chain analysis.
Yeah, so it is possible to track. It is possible to potentially pull back, and the question is, do you do it without? How do you do it? And that's what I would love to have somebody come on here explain that to the show. That would be an amazing discussion. Somebody who could simplify how that all truly works.
Yeah, it's I think it's pretty simple to track it. It's just you need a company or an organization like Chainalysis to actually have that giant database, and that front end that allows you to query it, to trace it, to click here, click there, and just easily follow things, or put together an investigation, almost like have an investigation platform that allows you to plug in the hashes and the accounts that you're interested in researching. But and because it's anonymous, there's details out there where you can figure out where you can de-anonymize it. Like, okay, this wallet was used in this attack, in this ransom letter, so we can tie those two things together, and we think we know which APT did that. So you need some kind of platform where you can start pulling all that stuff together when you do your investigation, and it's a all of a sudden, yeah, you can see how you can build a business around this. But it seems like everything that makes crypto bad to use or results in negative outcomes for businesses or individuals just kind of goes against the core principles of it, which is to be decentralized, to not depend on exchanges or any one control point for things. But it's almost like an exercise in why something like this maybe hasn't been successful or been done before, is because a lot of the solutions to those problems require you to then centralize stuff again and have to trust some big institution. Like maybe it's not a bank, but it's still, you're trusting somebody to protect your stuff for you.
Yep.
Let's see. So the big one that popped up yesterday, it was late yesterday even, I think, was a rumor, and I think it's more than a rumor at this point, with Sumo Logic being acquired by $1.7 billion. So I think that's an official offer, that Sumo Logic investors will have to respond to. And I think the most notable thing here is I saw somebody mention that there's no premium. Like they're offering to take it private for exactly what the stock is at right now. So that I don't know if that's
why would anybody take that? That doesn't make a whole lot of sense to me, unless they're considering that they think it's overvalued and about to dump. But in that case, you'd be selling anyway. So I don't understand how they can do it without a premium.
I mean, the deal isn't closed, but
yeah.
It seems
maybe the expectation is that they expect it to go down from here, which would result in a premium before close.
Yeah, so actually in most of January, it was almost half of where it's at now. It was $7 and something, and now it's up to 12, or somewhere around 11, 12 a share. So it's actually up from where it was at the beginning of 2023. That's
been the norm for all the high tech stuff this year, though. January, February, they all found a base and have rallied. The question is, will the rug pull occur and they come back crashing back down? Or is this the start of the uptick throughout the remainder of the year? Is still to be determined. But
yeah, I don't know.
This story to me is mostly interesting, Adrian, because of the number of cyber take privates, right? Because you got Sumo Logic, We had Barracuda, we had Mimecast, we have Rapid7 exploring sales sources. There was another one too. KnowBe4 was taken private, if I recall correctly. What that means is people see an uptick value. We're depressed. Cybersecurity valuations in the public markets are believed to be depressed by those in the know, right? Those that are large enough to make acquisitions of this caliber. And they're picking them up with the expectation if they hold for 3 years, they get a 50%, 70%, whatever bump on it, and then bring it back public again, right? So that's usually a clear smart money indicator that we're near a bottom of the market.
My concern with cybersecurity in public markets was always that because of the nature of cybersecurity, and this might just be because I'm in it, and this is just me believing we're special, when maybe I should. But my concern was always, it seems like cybersecurity companies have to reinvent themselves to remain relevant and to stay in business. Like we saw what happened with Next Gen AV and the incumbents that didn't move quick enough. The McAfees and Symantec's got dismantled and are a shadow of what they used to be, and all that happened very quickly. So I wonder if it's just not a good idea to take a security company public, because look what happened to Facebook. When Zuckerberg tried to do something drastic there, when he tried to get ahead of the market there, I think it was the wrong move. But for the sake of argument, let's say it was the right move, and he got really beat up and punished in the public market for doing that.
Yeah,
and
I think you could even just equate that to general public companies, though, Adrian, because by the time they go public, not all of them, but the majority of them at public time, they still have a pretty significant growth rate on a pretty high number, but they're in that phase of the maturity curve where they're starting to peak, to slow their growth, to turn into something that's less of a massive growth company and more of a consistent grower, right? Or you wouldn't go public, because if you're doing massive growth, you're going to still hold on to it. And so when that happens, the reasonable growth rates that sit out there are natural. Okay, I can get X% year over year pretty consistently and regularly from a growth perspective. Now, the question that you bring up, though, is will innovation tear them down? And that's tough to know. Look at Palo Alto. How long has Palo Alto Networks been public? Quite a while now. And they've done well and continue to grow and have done fairly well over time. And then others have gone out and just immediately came crashing down as something new and innovative comes out. But I think that's for software in general, all of the software companies. And that's one of the reasons why they haven't been IPOing at a rate comparably fast, on a, I guess it would be a number of deals versus number of total companies kind of ratio, right? It's gone down over the years.
But Palo Alto,
I was going to point out the Palo example too, because, they're obviously a big company and they've been successful in the public market. So do you think that a lot of this has to do with scale and diversity? Because some of these companies that are going private are a little more narrowly focused in the technologies that they offer, the products or the suites that they offer, versus something like a Palo, which is just, huge.
Yeah, 100%. You've nailed it, right? The ones that can diversify their product portfolio, make acquisitions, and pull in new markets that are innovating are the ones that will continue to grow at a higher, more substantial rate.
Yeah. For Palo Alto, I was just going to mention they've been super aggressive at making acquisitions, and jumping into new segments, even creating segments. They claim to have created the XDR segment, and it's not always the right move. McAfee and Symantec did plenty of acquisitions, but I guess you can argue, Palo Alto's been somewhat more successful at it. But they certainly knew they had to step away from selling firewalls, and expand beyond that.
Mm-hmm.
But so we get into the companies who are having trouble here. It's kind of a tale of, two things that can kill you here. So let's talk about Cyren first, because they've been around since 1991. I don't think they properly got into security until the late 90s, early 2000s. They were creating, I think they had an email client at first, so they were doing email hosting and building software email clients initially, and then they got into anti-spam and email security in general. And I don't think they ever made that move over to, like, if you look at the proof points and the Mimecasts, into security awareness and anti-BEC and anti-phishing and stuff like that. And it was just like anti-spam. And, I think that it clearly looks like a case where they didn't move with the market. They didn't innovate as much as they needed to stay relevant.
Yeah, I mean, it's just a sad story. When I saw the news break that they were laying off the entire workforce, it was kind of a shock. I was like, wow, how could a company that was, doing well enough to go out and become, I don't think it was if I recall correctly, it was like a pink slip public, but that might be wrong. But, even just to sell enough on the public market, go to zero. Like, you don't see that very often. The zero dumpster fire just is not all that frequent of an occurrence once things have gone public, right? Because the oversight is there and people are able to actually move it forward. You may see it slow growth, but let's count that against BlackBerry. How long has BlackBerry been around? And they haven't gone to zero. They're still making money. They're still worth something. The stock is still worth something. But somehow Cyren managed to run it directly into the ground.
I mean, BlackBerry had a big public painful pivot, like moving away from phones into enterprise software. They acquired a company that does emergency announcements. I forget the name of it. They acquired a company that does real-time operating systems that are used for car infotainment systems. Like they really pivoted super hard. Enterprise software, security software, and eventually shut down all the phones and all the phone stuff. And that couldn't have been easy for them,
But yet they didn't go to zero.
No, they didn't, because they didn't react quickly enough to the market to save their phone business, but they reacted quickly enough to save the business. So Cyren's on the NASDAQ, by the way.
Oh, are they? Okay. I thought they were on like a UK pink slip or something.
Not penny stocks or anything. Yeah.
Wow. It's just sad, to see people like that getting cut left and right. 121 people were axed all at the same time, taking essentially their operational capability down to zero. Their stock has come down. 98% of its peak value has been lost.
And apparently, they sold a huge chunk of their business in August, so I don't think it was completely a surprise to employees.
Wow.
Yeah.
It's a little sobering when I read that, and I wasn't familiar with the company. But when you read something like that, and given what's going on in the market with layoffs and these devaluations and down rounds and all, it's definitely a little bit of a sobering moment because, as long as I've been in security, people in security have been talking about, hey, we're insulated and we're isolated and we're in a good spot because you'll always need cybersecurity with the way the world's going. And then to see a company effectively just shut its doors after all this time, it's a little scary.
Now, shifting to the other ones, IronNet and Darktrace, I think both of those were problematic for day one, but for different reasons. So IronNet, I think it was more, and I'd love to hear your takes on this, but from everything I've read, founders coming out of Autonomy, which was sold to HP, which was deeply problematic. Going into starting a cybersecurity company with some very questionable marketing, likening their product to a human immune system, among other things. Whereas IronNet, I think it was more the growth strategy that kind of killed them, like going public via SPAC, before maybe they had found market fit. It just seemed super early for them to try and go public when they were still kind of grasping for what that product is. Even I think we had somebody from IronNet on last year, And I went back and I looked at my notes, and it was clear from my notes I didn't really understand what they did.
Yeah, it's another sad story for sure. Yeah, I'm not sure what caused this one. It's tough to know, but the Spec storyline is an interesting storyline because last year or 2 years ago, whenever the SPACs were hot and everybody was doing SPAC everything, everybody was talking about it. And in the back of my head, I knew it was kind of like, well, this is just the way to avoid the oversight of doing an IPO. This is a way to go public without having to get any oversight. And isn't inherently that just a dumb idea? But that was in the back of my head as a very thought, and I fell into, well, it's working. Yep. Everybody's getting all these SPACs, and there must be something right. What it isn't.
Doesn't create confidence, that's for sure. Like no S1, like I don't get to see anything. I'm just going to trust this, the blank check company. I don't know about that.
Yeah, well, maybe we'll see it come around again and actually be used properly. But clearly, the SPAC world is not what it once was.
Yeah, and then I think pretty much everybody has a strong opinion about Darktrace. I remember back when I was still at 451. And you can throw up that graphic if you want to, Gus. This is the right time and place to do it. But I tried to. I was basically given. I think this was the only time when I was at 451 Research as an analyst when I was actually given an order. A project like we want you to go find Darktrace, figure out what the heck they're doing because nobody can figure this out. And stood me up.
There's the graphic. I love it.
They stood me up on my. I went over to London for info security for the info security conference, and I don't think they just no-showed. I think they did cancel the meeting. They had there's some excuse about traffic or something like that. But it's just par for the course for all the stories I've heard about Darktrace, where it's essentially Zeek. It's essentially NDR under the covers. But with claims that just don't match up with what you can do with Zeek and NDR at all, just way overblown. And so this, this company that's shorting, this firm, I don't know what the right term is to call these companies. Is there a term for these companies that do this, Tyler?
Yeah, usually they're just very aggressive hedge funds that are, they essentially take a short position and then write up the reason why and publish it, right? And write it up as a research report, and it ends up pushing the stock down as people read it and learn about it.
Right. Yeah. So, the accusations in this report, I don't know if you've read any of it, Tyler, but it's basically like fake sales, fake revenue, like faking a bunch of stuff, having shell companies to help them fake the numbers and do some creative accounting. If a quarter of the accusations in this report are true, and apparently the response to this, Darktrace's response to this, didn't challenge any of the accusations. So,
wow. Yeah,
we'll be watching this one.
Many times when these short reports come out, you have to look at the source of the content, and it's biased, right? Obviously biased because they want the stock to go down because they've put a short position in play. And that is what's happening here. And generally what happens is people discount it and say, okay, sure. But this one's so overwhelming. There's so much here that, like you said, even if just one or two of the allegations are true, it's a massive issue, let alone the whole report. So it's a pretty scary situation. I think the dumpster fire graphic that still remains up there on the screen is probably fairly accurate.
Yeah. All right, we can move on. We'll dispense with the graphic. All right, let's see. What's next? I just happened to run across Trend Micro the other day and saw that they created a whole subsidiary just for automotive cybersecurity, which I think it was 1-2 episodes ago. We had a group of hackers of like 6 or 8 hackers had hacked every car. Do you guys remember that story?
Yeah, that was just maybe a month ago.
Yeah, after reading that story, Yeah, I can see why Trend Micro would have a whole subsidiary, and it's called VIC1, by the way, VICONE, dedicated to automotive cybersecurity. There's just more and more lines of code being pumped into cars, especially as we're getting closer and closer to, but never quite getting to self-driving.
Yeah, it's going to be interesting with that self-driving stuff. I'm not a electric vehicle person, or haven't been historically. I'm generally I like the sound of a roar of an engine, right, and have gotten cars that do that. But I'm pretty excited about maybe getting one for testing out some of the self-driving side of it, because I do think it's coming in the the next handful of years. I was reading something recently with the tax write-off stuff that you can do for an EV, an electric vehicle, and Tesla lowering the prices so that tax write-off $7,500 deduction would work for their Model 3s. People were snapping them up with the fully autonomous driving package, with the idea that they're going to turn them into robo-taxis, which I thought is a super interesting business idea. Literally just buying a fleet of cars and putting them out on the street and having it make money while you sleep.
Yeah. So there are businesses out there with the eventual goal of doing that. Now, Uber is one of them. So Uber invested in a whole self-driving car segment of their business. They had a huge investment in that. They tested it out, I think, somewhere in Pennsylvania. I forget exactly where. If it was, forget which city in Pennsylvania. But yeah, that's where. A bunch of security people went up there for that, and yeah, there are markets. There's a place again, I forget the name of the company, but there's a company somewhere in Arizona where you can get self-driving car taxis. Yep.
Well, at Black Hat last year, I know a couple of people that hopped into Ubers that had nobody in the driver's seat. Yeah, and it took more than needed to go during Black Hat last year.
Yeah, they've been testing it out in very isolated and small markets. Mm-hmm. But yeah, it's super interesting, and it's going to need security people. So yeah,
I know that the food delivery, some of the bigger chain restaurants that do food delivery are also very much looking into this, because the costs are, it's so much harder for them to make money on it now that gas is expensive, now that people don't want to work these jobs. So they're looking into it, but on a not very serious note, sure, if you're smart, you can just direct all the pizzas to your house with the pineapple and the bacon, and then direct them to Tyler's house. But there are some serious repercussions if something were to go wrong. What happens, when these cars, because they're not there yet. They're definitely not there yet. What happens when these cars cause accidents? What happens when somebody gets killed because of an semi-autonomous vehicle, causes damage to somebody's property? There's so much that still needs to be worked out. I don't know if I agree that it's the next handful of years, but certainly it's coming at some point. But I think there are so many issues. And it's not just from a cybersecurity point of view. Obviously, that's concerning. Yeah. But I think it's even bigger than this. And, the mandates to go all electric, or to at least have an electric line, are there. So it's coming. But as far as the actual, cars driving around with people in them, and the majority, or even 20 or 25% of the cars on the road can be autonomous, I think we're a pretty long way away.
Ooh, it sounds like we have to have a. It sounds like we have to have a little friendly gentleman/gentlewoman analyst bet on this, Miss KT, because I think it's going to be within the next 5 years.
I hope you're wrong. I hope you're wrong. I think we're so far away from them being reliable enough, but.
And don't you dare send any pineapple pizza to my house. I will be furious.
Oh, but I will.
In 5 years, if we don't see commonly self-driving vehicles all over the road, I will eat on camera a pineapple pizza.
There we go.
What's the likelihood of either of us remembering this in 5 years?
0. That's why I can say it and not worry about it.
No, it's not 0, because Adrian writes everything down.
Adrian puts it in that system that emails you in 5 years and tells you the bet you made.
Yep. If I put it in my calendar, I'm going to do that right now. I'm going to put it in my personal calendar, not even my work calendar.
Let's go. Let's
personal calendar. Yep, I'm doing it. 2028.
I will stand behind that bet.
So as far as electric cars go, not self-driving cars, but electric cars, I know that the UK has a moratorium set for 2030 that you can't sell passenger vehicles, I think, with combustion engines after 2030.
Oh, that's only
and
7 years away.
A lot of brands have said we've designed our last internal combustion engine. So I think a lot of that's going too far, because clearly we're still going to need diesel engines for a lot of stuff. You can't operate a construction site, that's, say, even 20 or 30 or 50 miles away from civilization without a lot of diesel fuel, right?
Yeah, it's funny. I'm currently leasing a vehicle that this particular luxury vehicle vendor has declared that the model year that I have is the last year that it will be a fully combustible engine. Going forward, every vehicle they make will be at least hybrid, at a minimum. Yeah. And so I'm debating keeping the vehicle just for that reason alone, because I think it could be worth something someday as the last vehicle of this particular brand.
That's one of the reasons I picked up the car I got, is because I think it's going to be one of the last big combustion engine with a shift, because that's the other trend is away from free pedals. So I think the value of that car is just going to go up and up, as long as I keep it in one piece. Yeah,
we'll give it to the kids someday.
Maybe we'll see. So HashiCorp built a document management system on top of Google Workspace, which I found kind of interesting, because doesn't Google Workspace already have a document management system? So I started to dig a little bit deeper into it, and I guess I kind of get it. Like it's more of like a version control system. Like I even know people that use things like GitHub, Bitbucket for document management, because it's a lot easier to do some of that control. Like, for example, you can deprecate a document, which is not something you can do with Dropbox or Google Drive right now, which is, documents get messy in an organization. So I guess I can see why they built this, but it's called Hermes, which I believe is a messenger god. Isn't that a version of Mercury? Like there's Mercury and Hermes, or the messenger gods.
Well, Hermes is also an upscale clothing retailer, so probably not the best name for a company, because there's a very, very well-known established brand out there, but that's another issue.
But it's a name for it. So it's HashiCorp. It's the name of the product, but yeah, still you run into SEO issues. Yeah. And the only reason I know that is because I used to use an email server, an email product called Hermes, and that's why it was named that, as it delivers messages.
There you go.
All right. Let's see. Layoffs. There were a ton of layoffs. I didn't even post them as separate stories here. I just kind of compiled them all together. SecureWorks laid off 212 employees. NCC Group 125. Okta 300 employees. Cyren, we talked about all their employees. Oxhunt, which I hadn't heard of before, which is a Finnish company, I think, 29 employees that's looking to expand into the US. And Hermetic, 30 employees. So that's all in the past 2 weeks, I think, all those layoffs. Quite a bit.
I hope Tyler's right that we're nearing the bottom.
Well, just to be abundantly clear, I wouldn't say we're nearing the bottom. I think let me rephrase that. I think we're near the bottom, but that bottom is long. It's a long bottom before we start really going up.
A long bottom.
It'll stay flat for a while, is my point, before we start to really grow.
Yeah. All right.
Yeah, there are a lot of years to reverse damage from.
Where are the fun questions? Where's the uplifting stories here?
Yeah, it's been quite a dumpster fire week.
Yeah, I mean, I'm just scrolling through some of the other ones, and I mean, the CISO role going through an evolution, that's not a negative article. That's number 16. How to survive below the cybersecurity poverty line, number 17. That's it's fairly negative. And then 19 and 20, the All In podcast basically predicted, well, not just them predicted, they were discussing a tweet from Tom Lavero where he was predicting a mass extinction, basically saying, like, think 2008, except startups taking most of the brunt of that there. So, a lot of startups not making it through this. Is the prediction.
Did you read that whole Tom Lavero thread? Is there any indication in that thread of why he feels that way? I'm going to posit a guess. I haven't read the whole thread. Is it because he feels that the entire early stage investment market has been soured to those with significant money, and there's no way for kind of the startup space to raise anymore? Is that the thought process?
The thought process is that the result of 2020, 2021, 2022, the first part of 2022, too many companies being set up to where they're going to need a cash infusion and won't be able to get it, like a large one.
Yeah. And I think that's based on a couple of things. One, the fact that companies, or the fact that the investors, the LPs that put the money into the venture capital firms have soured. They've just seen negative returns. They've gotten burned. They're not going to put any more in, and what's there will dry up fast.
So it's really two things. It's the fact that these companies have been set up to grow fast, to need funding quicker, than it's going to be come for them, and more than will come for them. But also that there was a lot of due diligence just not happening when this money was going out. So that's another big thing that they touch on and they talk about in All In podcast is, hey, VCs, the people deploying this capital are going to have to start doing a whole lot more due diligence than they have been in the past.
Mm-hmm.
So those two things combined is why he's predicting a mass extinction. And again, security doesn't necessarily follow all startup trends. So, we'll see about that. We do have a fun one here, though. I think I'll throw it to each of you. To you first, Tyler. You wrote a post in mid-January about the fallacy of PLG, and someone popped into your DMs or something like that and said, "Hey, I think you're full of crap, and I'd like to write a retort to that." And they did, and you published it.
It's just funny how you put it. That's the best part. Yeah. Yeah. So first of all, let me apologize for any breaking up that my audio might be doing. Gus, if I end up dying here, just cut me off and throw it over to Katie. But I wrote a piece about, what I consider the fallacy of PLG within cybersecurity and why it's a difficult delivery, a difficult way of building a go-to-market. Steve LaChance, he pinged me, and I actually had a chance meeting with him at a bar, and we talked about it. And he pinged me. He's like, "Hey, can I do a piece, and write my counterpoint?" And I said, "You know what? I love that. I love it when we can have healthy discourse and healthy debate on a topic." And I said, "Absolutely." So I gave him the opportunity to do a clap back on how PLG, product-led growth, is right for cybersecurity. And quite frankly, his points are excellent. I think he's right. It's just that, in my opinion, the number of companies that fit successful product-led growth capabilities within cybersecurity are pinpoint small. There's just not enough of them that are going to work. And so that's kind of the point that I was making, and he has some really interesting points to counter that. It's a good read.
Well, doesn't this, Tyler, actually also go back to Adrian's point about the mass extinction, too, and the oversight? Doesn't some of that have to do with the fact that when money is free-flowing, when companies feel flush with cash, you don't have to have as good a strategy, because if you just have you hit the right person at the right time with the right message, the money's there. Okay. So it doesn't matter as much as when things get a little tighter, when budgets are tighter, when scrutiny is tighter. You have to have a better strategy. And companies, at least for the past, handful of years, have been playing a little fast and loose because they could.
Honestly, I think
yeah,
they're both
I love the
I read them both.
I love the connection, Katie, between the two topics. Oh, I don't know who's talking here first, Adrian. My bad, but I love the connection of the two topics, Katie. I don't know that they're I might be dying. If I'm dying, I'm sorry, guys.
No, you're not. You're not.
You were there. You just physically froze.
Okay. I love the connection between the two topics. I think, Katie, you brought up a good point. When resources are infinite and money is free, you can make very risky decisions that may or may not work out for you and live on to fight another day. And that could be driving some of the attempts at PLG, even though it's not the most natural fit for cybersecurity, for sure. I think you're right. The question is, if you do find the right one fit, you can actually do very well with PLG. And I think that's true. I do think that's true. It's just that most cybersecurities don't fit that mold. Most cybersecurity companies don't fit that mold. So he's just got some really good points. And Adrian, I apologize. I didn't hear your comments or questions.
Yeah, no, my comment is very short and concise. Basically, I read both of the essays, and I found they're both really saying the same thing. They're so you guys really agree. Like it's not so much of clapback. You're both saying PLG is great when it makes sense. But it doesn't always make sense.
Exactly.
Yep. And next, I want to throw it over to you, Katie. You've got a great post talking about how people can, specifically cybersecurity practitioners, can deal with the current layoff market. Can handle job uncertainty and position themselves well for success in this kind of market.
Again, this comes back to the arguments being a bit of a dichotomy, right? Because on the one hand, we're seeing layoffs every day. You just mentioned some great companies that are laying off a decent portion of their workforce. On the other hand, cybersecurity positions are still available. Maybe not as many as last year or the year before or 5 years ago, but the need, the demand is still there. It's still definitely there, but you can't be complacent. When the purse strings get tighter, you have to demonstrate your value. You have to be on top of things. You can't be, rolling in at 10 o'clock and then taking an hour lunch break and, all the things that not in cybersecurity necessarily, but in a lot of companies were being allowed to happen for years. I think we've all worked with people who you're like, how does this person even have a job? They don't do anything. So cyber, it's still hiring. I look at the job boards and when I've talked to people in hiring positions, both hiring managers and recruitment companies, they say, oh yeah, sure. But the hiring market's a little screwed up as well, right? It doesn't work really well. They're trying to put automation into it in places that it doesn't work so well yet. But if you're really conscientious, if you work your network, I don't mean work your network in a negative way. I mean, really be a good worker, be easy to work with, or maybe even if you're not easy to work with, because some of us aren't easy to work with, but if you provide a lot of value, you can still put yourself in a good position. And, my colleague Tanya, who I actually knew outside of work before I knew her inside of a work situation, she counsels people all the time on, look at what you're doing. Do you actually want to be doing it? Because if you go into an interview and you don't really want that job, they're going to know anyway, and you're not going to be happy and nothing's going to work out. And we hear a lot about burnout in cybersecurity, so that's something you have to consider as well.
I love the name of her business.
Yeah, she's pretty cool. She, she's just starting up a one-woman show at this point, and she's doing great things for a lot of people. A mutual colleague of ours decided after speaking with her, God, I hate what I'm doing. I hate living in the Northeast. So she bought a house, no job, moved down to South Carolina, just all based on, the introspection she was able to do with Tanya. And, now she's enjoying herself. I don't know if she's employed anymore, but she bought a house down in South Carolina and is much happier.
Yeah, it's hard to get out of a rut sometimes, and it's just so easy to forget that, hey, there's other stuff out there you can be doing. I got laid off in January, and there's been no shortages of jobs to accept. But for me, one of the biggest thing is talking to people like Tanya, people who are kind of pseudo in the recruiter world, or just people who are peers, about the different opportunities out there. Because for me, being a generalist and having done so many different things, just choosing what direction to point myself in and then put some energy in that direction, because indecision isn't going to get you anywhere, right? Like I can't explore 3 different directions all at the same time. It's I guess I could, but it probably wouldn't be a good, good way to spend my energy.
No, and honestly, I've been laid off a couple of times, and the immediate shock is overwhelming, right? But after you breathe a little bit, it's actually refreshing because you go, wow, I didn't really want to be doing that anyway.
Right.
And this happened every time, every single time.
Yeah. Yep, I've been there too. Yeah, so that's a great read. That's number 22. Tyler's was number 21. Katie's was number 22. Both great reads. And Katie, yours was especially helpful to me in my current situation.
Well, I'm glad. And I am looking out for you. I keep looking to see if I can find anything, in my LinkedIn travels.
Thank you. I appreciate it. All right, let's hit some squirrel stories and wrap this thing up. I couldn't decide, so I've got 3 squirrel stories in there. How about maybe we just talk about one of them? What do you guys, which one is most interesting to you? 25, 26, 27. We've got.
I'm going to go ahead and let KT pick because my computer's crashing, so I can't read them.
Oh, okay. So I'll read the titles while you decide. There's Codebreakers decipher 50 plus Marys of Mary, Queen of Scots, because they were apparently encoded in some kind of cipher. What if Google Calendar showed the cost of a meeting, which is really just an image that somebody posted on Twitter, but man, of images that are worth 1,000 words, that one's worth a lot. And then there's sushi terrorists tamper with other diners' conveyor belt sushi.
For me, I don't know. The last 2 are really compelling for very different reasons. I love the idea of a calendar showing the cost of a meeting, because I've been struggling the last couple of months with the number of meetings on my calendar and actually getting my writing work done and getting, the actual product marketing work done that I need to get done. And for some reason, this week and next week are devoid of a lot of those meetings, and I feel so productive. I'm getting so much done. I got an entire messaging doc done today, which would have taken me like 4 days last week, right? So I love that idea. On the other hand, man, manipulating a sushi conveyor belt is pretty funny.
Yeah. Well, since we're already talking,
I got to go with sushi conveyor belt. I have to.
Okay. All right. Yeah. So sushi conveyor belt, basically people are capturing this on video, but people are like picking stuff up off the. So if I've only been to one once. I visited my sister in Dallas, and we were talking about where to go for dinner. Her and her husband. And they have one of these places. They have a sushi conveyor belt place, and I had never been to one, so I was like, "Yeah, that sounds like a blast. Let's go do that." And so you can just take stuff off the conveyor belt for people who haven't been to one, and it charges you for it. Or you can custom order stuff, and it'll come around on the conveyor belt just for you. Or in our case, there was actually a little robot that came by and delivered our drinks to us. Like a little Star Wars looking robot came by with a with a serving platter with all our drinks on it. And apparently, like, as stuff is going by, people are just like licking the food, licking the dishes.
So awful. It's so awful.
People captured video of this, and as you can imagine, people are upset.
Yeah, I can just imagine, some sort of robot. You reach for your sake or your tamago, and a robot reaches out and grabs it back, and you're like, but I wanted that.
Yeah, so people also taking other people's stuff is also part of the trend.
That's very sad. Wait, Tyler, hold on. Since you don't like pineapple on pizza, do you like sushi?
Yes, I love sushi. I just don't like conveyor belt sushi.
Okay, just wanted to make sure. Because you don't like chocolate either.
No, chocolate's gross. Sushi is amazing. It's fantastic stuff.
There's a security angle here because this is a system. The conveyor belt sushi restaurant relies heavily on trust, right? Everyone can access that conveyor belt, and that's basically what's being demonstrated here. Is if we want to throw this thing into anarchy, all it takes is one customer to throw the whole system, the whole way that the restaurant operates, into anarchy. And we've seen this before with the internet, like the time that. I'm going to blank on his name, but that one guy found all the open printer ports in the world and sent Nazi propaganda to it, and started printing out Nazi propaganda on any raw jet direct port he could find exposed to the internet. And universities everywhere had Nazi propaganda printing on it. So yeah, it only takes one person to throw a heavily trust-based system, like the way universities set up their networks, into complete chaos and anarchy.
I just had a vision of robots making the sushi and putting way too much wasabi in sushi and really pissing off diners.
Wasabi hack.
Oh, God.
Tyler probably loves that idea. He's probably thinking about how to do it.
No, it's totally funny because I love wasabi. I would, if you overloaded my wasabi, I'd be fine.
All right. Unless you want to talk about the calendar one a bit, which honestly was my favorite, we could wrap here.
No, I don't want to talk about the calendar one. I'll tell you specifically why, because it would be so depressing to see the amount of hours that get wasted in meetings.
It would. So, for those listening, you'll have to go check out the show notes. I highly recommend checking it out. It's very visually powerful. This image of applying actual dollar costs of a meeting to a Google Calendar entry to tell you how much that meeting is costing the company. That's a really cool one, or depressing, as Tyler. Depends on your perspective. It might help you push just this image alone. I plan on using in the future as a strategy to push back on having frivolous meetings. So
love it.
Could be useful to you. Thanks so much, Tyler, working through your internet issues, sticking with us today. Thank you, Katie.
Thank you, as always, Adrian.
And a big thanks to everyone for watching or listening to this week's episode of Enterprise Security Weekly. We've got a great episode next week. Don't miss it. We'll be talking with Space Rogue about his new book. See you then.